we ended up getting caught up with council. It was bizarre because the council, when we did the resource consent, we sent it through to council and it went through to what they call their design board. And their design board came back with an alternative and they said, actually, we'd prefer to do it like this. And we looked at it and went, shit, that's awesome. They'd taken our development, which was a little bit ugly, and they came back with this plan that was just awesome. So we're like, okay, yep, we're totally keen to do that. So we went and did what they asked for, right? And then we took it into council and they're like, yep, that's really cool. And then they put us through to consent hearings, and then they turned against us and fought against it. And so we had to take them to the environment court twice to get the development approved, even though we were doing the development that they wanted us to do. And so what we learned is that councils are a series of fiefdoms with a shared interest in car parking. And you can be talking to one part of the council and they'll have a totally different view to another part of the council. And it was diabolical. Anyway, we lost a lot of money and time trying to get that project back on track. And then we got caught with cost inflation and a softening housing market.
So here we are today in the lovely Bronte Studios with one of New Zealand's most renowned founders. Some of you may know him for his exciting numbers that he shares with us through different news medias. He often talks about percentages and the rise and fall of inflation and all of these exciting things. But welcome, John. It's fantastic to have you on the podcast today. Thanks so much for taking time out to catch up with us.
Thanks, Mike.
Cool.
Yeah.
I'm really interested in diving into where it came from. Here you are working in corporate and you're getting good money and you've got a good life, and yet you go out and start this. Can you remember the first time you had the thought of having your own mortgage broking company?
Yeah, look, I think I've always had a bit of entrepreneurial spirit. So they kind of started when I was probably, 10 or 12, I think, pine coning out in the Haru Valley in Wellington, and then selling the pine cones. And then I did another one where I used to go out and shovel horse shit for free down at the horse academy, and then bag it up and sell it to the local plant shop. And so I don't know, I set up my first company when I was 18. It was called Theft Check International. It was some dubious idea about doing data matching to sort of identify stolen vehicles. It never went anywhere, but as an 18-year-old, that was legally the age I had to be before I could set up a company. And that was a bit of an exercise. Look, I did my OE, I came back, I found myself in banking. I love numbers, so it was a natural place to land. I did pretty well in banking. I got over promoted. So at the sort of tender age of 32, I was running a very large part of the bank. I was general manager of products for ANZ. And look, for a few years I'd had itchy feet. I'd been wanting to do something different. I'd felt that I'd done my time inside a bank. One of the things when you're inside a bank is you look around and you realize there are no old people. So people at some point decide that they've had enough of it. And I reached that point at 34, and it was time to get out. And it was for me, part of my role at the bank was sort of trying to change retail banking from being product focused to customer focused. And so I was driving a lot of change inside the bank that was designed to put the customer at the center of everything, and including the decisions that the banks were making. I had a time there where, I was at Westpac at the time, and the bank was behind plan, and I ended up having to do a whole lot of revenue initiatives that didn't feel very customer focused. And for me, that was the moment where I was like, actually, I don't know that I believe, I stopped drinking the Kool-Aid basically and thought there's got to be a better way. I agitated on it for a while. I changed banks. I went across to ANZ, did the merger with National Bank, but realized that fundamentally banks are banks. And so for me to do something different, I actually had to get out.
Yep. I read one of your motivations was that you could see that the mortgage broking industry wasn't very buyer-centric. And that's one of the observations that in your research, that you saw that because mortgage brokers were being paid commissions, they were actually almost being enticed not necessarily to present the best opportunities to get the deals across the line. And being in a critical role within the bank, that's why being in a critical role in the bank, you could see that disconnect and you could see that wasn't serving the clients well. And so you took the really unusual step, which had never been done as far as I'm aware, of actually paying your advisors. So their success isn't tied to how many loans they can get across the line. And that was the big change in your business, which made it more buyer focused. Is that correct, if I interpreted that correctly?
Yeah, you're right. I wasn't going to set up Squirrel. I was actually going to set up a different business that was actually doing sort of data optimization, which is random. But I realized I make no money doing it. So Squirrel was the backup idea. But and Squirrel had actually started, there was an earlier genesis, which was actually a sort of a comparison site, which is really about trying to give Kiwis a better deal. And by providing a site that would give them really good comparatives and an easy way to switch banks. That was probably the genesis of Squirrel. What I realized, I really wanted to set up a bank. You can't set up a bank in New Zealand without a huge amount of capital. It's a very challenging market to launch a business into. So brokering was an easy entry point to banking. The housing market felt like it was underserviced. Brokering was still relatively young. Most of the brokers in the industry weren't marketing focused. They were sort of largely spilling out of bank branch roles, becoming brokers, taking some of their customers with them. And that's how they got established. We were the first to go on the internet. We were the first to do sort of paid search with Google. We were the first into social media. And very marketing focused, so building a brand. Mike Pro had been around for a long time at that stage, and they're the kind of the godfathers of the industry. But we came out with a pretty strong sort of marketing, brand building focus, got the business up and running. You're right, we very different model. It's more sort of I'll use the words loosely, corporatized. But we do pay salaries. And the interesting thing with that is it means it's quite a hard business to scale because you have very high fixed costs. So it comes with risk, right? Because the housing market is notoriously volatile. It goes up and down like a yo-yo. And more than that, not only do we just have the normal property cycles, but, from time to time, we've had an RBNZ, a reserve bank, that's been hell-bent on slowing the market down. So, we've had things like LVR restrictions, debt to income restrictions, obviously recently really high interest rates, trying to slow down the housing market. And so all of these things sort of hit us head on in a business that's got quite high fixed costs. So, that's quite challenging. And that's why any business that's sort of tried to copy our model has struggled to scale.
Yeah. Mate, and you didn't only scale. I mean, you actually took that challenge on because you obviously, I know in the early days that you had a lot of struggles. I read somewhere that you and your wife, Annalise, who has been a critical part of this journey from what you've told me, has been huge. Yeah. And there was times that, you talked about renting your own private home out to try and cover the wages bills. I've read that you've, borrowed money off significant sums off friends and family to get the wages bills covered. These are the sacrifices people don't see. And then once you've made all those sacrifices, you got a really successful business with selling mortgages. Next thing, you got peer-to-peer. But not only peer-to-peer lending, mate, you actually put in that guarantee. I don't fully understand it, but you put in that guarantee that no investor would lose their money on peer-to-peer lending. And you had a fund sitting somewhere. That's an incredible result, really.
Yeah, look, I think probably the key thing for us is that we're patient, right? It's taken a long time to get here. We've been going 17 years. It's a bit of a joke. If you went back and looked at my original business plan, I totally underachieved it. They say it takes 10 years to be an overnight success. I reckon it's probably closer to 20, but we're very patient. And I think in the New Zealand market, you kind of have to be. It's a small market. We've got somewhere between 5 and 6 million people, which is the size of, Sydney, and it's an entire country, right? So, in the New Zealand market, you have to build up significant market share to scale. You have to be a 5 to 10% market share player to get to scale. Whereas in overseas markets like the US, you can have massive scale and only have 1% of the market. So the challenges here are different to overseas. And it's one of the problems, a lot of people here, a lot of entrepreneurs and a lot of young people read American books on business and economics and how to be successful. And, those are books that have been written in an economy of 360 million people, where, grabbing a 0.5% market share, you can have an incredibly successful business, whereas that just doesn't float in the New Zealand market. And so, the challenges here are different. And so you've got to be patient, especially when you're in a domestic market. If you're exporting, so like there's plenty of success stories that come out of New Zealand that are export based, playing on the global stage. The expression in New Zealand, global from day one, right? Which is, to be successful from New Zealand, you have to be export led. Well, there are certain markets where you can probably build up enough domestic scale, and one of those is banking. So, but you have to be patient, and it takes a long time. Kiwi Bank's been going, what must be close to 30 years now, and they've got about 7% market share of mortgages, maybe 7 or 8% market share. It takes a very long time to build scale in this industry. We worked out very early on we didn't want to be a bank because it's too hard. Too much capital required. The model doesn't work well subscale. So basically, to be successful in banking, you have to have very large scale. And so, that's why the market is essentially dominated by, 5 major banks, including Kiwi Bank. It's a small market, and you need massive scale to compete. So what we realized, there was no point being a bank. That wasn't going to work. Peer-to-peer offered us an entry point into becoming a lender, but on trainer wheels. And so we went into peer-to-peer lending 7 or 8 years ago. We did a bit of consumer finance lending. We weren't the first. The first was actually Harmony, who do consumer finance lending. We started with consumer finance lending, but the goal was always to go mortgages. It's just a mortgage is too big for us to peer-to-peer fund on day one. So we did a little bit of consumer finance lending for the first, I'd say, 3 years, and kind of learned our craft. We built really good IT systems. We build all our tech in-house. So all of our systems are built by us because they didn't exist anywhere else in the world at the time. For those into crypto, we've effectively built a DeFi system, or close to a DeFi system. It is genuine peer-to-peer. It just doesn't exist on a blockchain yet. And we've scaled it, right? So we do about 600 million a year of lending on that platform now. Financial services is really highly regulated, so it's actually quite difficult to jump from country to country. That in itself is interesting, right? Because you've got a lot of startups at the moment sort of trying to play in the payment space. And it's just somewhere where we will never go. There's no money in payments. Payments is a global game. And, success in payments is going to play out globally. So when we looked at banking and sort of went, okay, what are the markets that we want to play in? We looked for markets that would have high barriers to entry for international players. So markets that are domestically regulated, and lending is one of those markets, along with deposits, right? So, particularly mortgage lending, because, consumer finance lending, there's a lot of regulation around that, but you don't have to deal with underlying security. Whereas with mortgages, you've got to deal with underlying security. And so you run into a whole lot of domestic regulations that are difficult to operate across borders, right? So it felt like a market that we could compete in without having to worry about the big global guys like Apple and Google and stuff coming into our territory.
Yeah, okay.
So there's a couple of interesting things with our business. The first is that we are just mortgages. So early on, we dabbled in life insurance and general insurance and stuff like that, but we completely removed that from the business 4 or 5 years ago. We simply do mortgages. So we're specializing in our vertical. Now, that's both sides of mortgages, in that we're a broker or a lender, and we're also a fund manager, in that we take people's money and we invest it into mortgages or into property, right? So that's our specialty. Most in the industry tend to go for a share of wallet approach, and they tend to try and do bits of everything, whereas we've gone for a straight vertical and stay specialized in mortgages. So I guess that's our play. when we look at that, I'm a huge I focus a lot on competitive advantage. So, what is your competitive advantage? And so we look at the broker market, we look at banking, we look at technology, and we sort of say, okay, with those three competing areas, where do we find our advantage? So, what makes Squirrel different, so to speak? And so, when it comes to the broker industry, we outcompete them in terms of we can invest more. We can invest more because we've got salaried staff essentially. So that allows us to, it's harder to scale, but it also means that we can invest more into the business. And so that's reflected in the brand, in terms of advertising. It's reflected in technology, in terms of the amount of technology investment that we're making, which is very much focused on productivity. So that's an advantage for us. As far as banks are concerned, well, we're now a lender, right? But we don't compete with banks head on because there's no point. What we do is we focus on profitable niches, so parts of the market where the banks aren't operating well.
Yeah.
And so at the moment, one of the biggest markets that we're in is construction lending, because as soon as we went into recession, the banks exited construction as fast as they could. We stayed in. And so, we're probably one of the largest non-bank lenders now into the construction sector.
So where do you see that going, the construction sector? I mean, we need more houses, regardless of the environment. We need more houses, and how do you see it going? You feel a recovery coming in 2025?
Yeah. Oh, look, slow recovery. New Zealand's a pretty boring, low growth economy, right? There's nothing too sexy about us. I mean, beautiful environment, lovely place to live, but we're never going to be an economic powerhouse. We basically make food. The good thing with food is that people always need it, right? And we've got a good environment, and people always want to visit New Zealand. So I'm not a big fan of tourism. It's a sort of low value industry generally. Most people that work in tourism are close to minimum wage. It's not a way of improving the wealth of the country. If you look at most countries that have tourism as a major industry, most of them are third world countries. So yeah, look, I'm not. So tourism's important, but I wouldn't put all my eggs in that basket. But look, fundamentally, we're a food-based agricultural economy, low growth, but equally stable, right? And stability is a good thing in this world. So I kind of feel that we'll have a slow, gradual economic recovery. Nothing too exciting. The only thing that worries me is government and successive governments, just basically using lolly water, which is low quality immigration and bad foreign investment to keep the game running. The issues here are bigger, they're more structural, they're going to take longer to solve. And, we've got just a real problem in New Zealand with short-termism and our inability to make big decisions that are better for the country long term. And I like, immigration is important, but productivity is way, way, way more important, and getting the dynamics right. And I just don't I don't feel that we're on top of that. But we haven't been on top of that for 20 or 30 years.
Mate, it's fascinating, because productivity is the key to all business, really, isn't it? Traditionally, in mortgage broking, the more you sold, the more you made. You created a pay-them environment, which changed the whole context and dynamic of your team. I'd love to have your parallels between paying people commission, what will they compromise to make a dollar when they really need to be fed, versus getting the job done because they know that the quality and standards are required and they're getting paid regardless of the time.
We can't employ sort of sales dogs, right? Like, sales dogs don't last in our business because they'll leave us to pursue even higher commission rates somewhere else, So commission-based people are trying to negotiate their way to get as much of the pie as possible. The problem with it is that it creates very short-term thinking, and it's very hard to make good long-term strategic decisions when you're just focused on trying to grab as much of the short-term pie as possible. We've avoided that. We've stayed away from that game to allow us to make longer-term, more strategic bets. And my bet would be that long-term will win. In the short term, it's harder to win But in the long term, if you're investing and you're making good investment decisions and you're changing the game and you're looking for competitive advantage, in the long term you'll win, but you've got to have a long-term horizon. And in our industry, that's a 10 to 20 year horizon.
That's remarkable at times. I'm still recovering from the Kiwi Bank statistic. 30 years old and it's only 7% of the market.
A lot of people bank with Kiwi Bank, right? So I think if you sort of said, how many Kiwis bank with Kiwi Bank, it'd be a very, very high number because a lot of Kiwis split their wallet. I've got 4 bank relationships, right? I've got a credit card at Kiwi Bank. I've got a credit card at ANZ. I've got my mortgages with ASB, and I've got a bunch of stuff with BNZ. So the only bank I haven't got something with is Westpac. So we're all split bankers, and I'd say most Kiwis have some form of relationship with Kiwi Bank. But, Kiwi Bank hasn't managed to become their main bank. And they've still got a long way to go, right? It's just the nature of the beast. It's a tough gig. And Kiwi Bank does some stuff really, really well. But to be honest, all banks here in New Zealand do a good job. So, it's hard switching banks. People just don't do it en masse. And so it takes a very long time to build up a market share.
Okay. Where do you see the future of banking going, mate?
Oh, I don't think it will change all that much. Look, at the end of the day, the most important thing that banks do is provide surety to people that their money's safe, right? And that's what banks are all about. That's why you have a regulator like the RBNZ that's incredibly tough to deal with. It's all about confidence in the financial system, because without that, you've got nothing. It would be a tin pot economy if we didn't trust our banking system. And so, look, I don't think a hell of a lot changes. The real challenge with banking is that, these guys have a privileged position. You've essentially got 4/5 banks that will continue to dominate the market. I don't think you'll get some aggressive new player in the market. The economics just aren't there for it. It's a country of 6 million people, right? So no one's really attracted to this New Zealand market. We're a small economy at the bottom of the world. So you're going to have the same sort of 5 players. Bearing in mind, it would have been 4. And the only reason that Kiwi Bank exists is because of the government at the time setting it up and having the patience, right? That was, Kiwi Bank, in terms of return on investment for shareholders, it was a terrible investment for its first 20 years. And it's still not great in terms of return on capital. That's why the New Zealand Super Fund sold out of it. A great business, don't get me wrong, great business. Steve runs an amazing business there, and I think Kiwi Bank's just going to go from strength to strength. I would sort of say, in the next 15 to 20 years, Kiwi Bank will be the dominant bank in the retail market in New Zealand. It'll knock ANZ off that perch, at least in terms of retail consumer markets. I think it's much more challenging than the commercial and corporate space. But in terms of consumer, it's continuing to grow market share. That takes a long time. They can't probably grow any faster than they are. I mean, it's pretty challenging. They are growing, and they'll continue to grow, but it takes a long time, right? So I said 10 to 15 years. It's probably longer than that, maybe 20 or 30 years. There is a time horizon out there that says that one day, probably in my lifetime, Kiwi Bank will be the largest retail bank in New Zealand.
Yeah, I follow that. Awesome, mate. So, well, that's the future of banking and banking for us. What about the future of Squirrel? Where you go, mate? How big is this thing going to be? It seems to be taking the real role lately.
Yeah, well, I think, look, people are starting to notice this a little bit more. I mean, we do about 3.5 billion a year of mortgages, which sounds like a really big number.
So would you be the biggest mortgage broking company in New Zealand currently?
Yeah, we would be, in terms of an individual entity that's writing mortgage broking, because we're not a franchise, right? There are franchise systems out there that would be a similar scale to us or even bigger, but they're not individual businesses running their own game, right? So we'd be absolutely by far the biggest individual business in the brokering space. Brokering, look, we'll probably, our goal is to get up to around 10% market share. We'd like to write 5 to 6 billion a year in brokered loans. On the lending side of it, we're sort of rapidly growing that side of the business. Would like to write $1 billion of construction lending. within the next couple of years. And I think we'll get there. We're investing quite heavily in that space. It excites us. But the thing about our business is because we don't do this kind of share of wallet thing and we're very focused on our markets, I think we can claim to be experts in property. We live and breathe property, right? We see a lot of it. We're very dominant in that first home buyer space. So we've got people, buying their first home up and down the country. We're also funding builders and developers. So we're on both sides of that market. We're seeing the buyers, but we're also working with the developers in terms of building product. So it puts us in a pretty unique position to really understand this market. And I think we do a pretty good job of it.
Mate, you certainly do. Last time I was talking to you, you're working on solutions to make it easier for people to get into new homes. You can see the connection between the new home builders and the contracts and the people that have got houses to move and the simplicity of that move. So you're talking about playing a big part there. That's exciting. I'm a big believer in construction. I know you're involved in property developments, John. Just really briefly, tell me about your property development experience, because people, they don't recognize that what you've done to raise this business up out of the ground, still be the major shareholder and get it up out of the ground, has meant that you've had to pretty much do a bit of everything to get there. And property development's a field that interests me and a lot of people. Tell me about your experience there in Auckland.
Yeah, look, it'd be going back probably 10 years ago now. In fact, probably longer. It was really off the back of the GFC around 2015, I think. I started trading property with a mate. So we were just buying and selling property, doing small scale renovations, that sort of stuff. That was really to supplement income coming out of Squirrel, because for at least the first 15 years of the business, I was the worst paid mortgage broker in New Zealand. So I didn't take a dividend out of this business for 15 years. And I paid myself a salary, and a pretty shit one for quite a period of that. I was always the last one to be fed, right? And that's a classic business owner thing. You're always the last person to get fed. People don't remember that when you get to the end and, maybe you get a good payday or something, but, you're always the last to get fed. And when it was tough, it was tough. I remember drawing down my credit card to its limit just to pay the salary bill, because it's scary, man. Every fortnight the salaries go out and we ran out of money at least twice. And you're right. Earlier on, you said I had to go and borrow some money off my in-laws. And I put it in a savings account, hoping not to touch it. We didn't touch it, so we're able to give it back to them about a month later. And that was only because I maxed out all the credit cards, and things just worked out okay. But so property development for me initially was property trading. It was buying and selling properties, trying to make an extra buck, just keep things ticking along, because I couldn't take much money out of the business. And, and I knew the property market pretty well. So it seemed to make sense at the time. And it was quite good. I was making probably 200,000 or 300,000 a year out of it. So it was useful, right? And then we sort of started to get into some bigger stuff. And then I got convinced to go into a fairly substantial development project, which was 35 townhouses. So I went from 0 to 100 very quickly. That was one hell of a big learning curve. It cost me probably, or me and a mate, between us, $1 million. That's how much we lost on it. So about $500,000 each. That's like an MBA at Harvard. You learn a lot. And so I have a lot of empathy for guys that go through developments, and particularly if you get caught out in the wrong part of the cycle. And look, that's typically what happens, is that you can lock down a lot of the risks with development, but there are some risks that you just can't lock down, and one's the economic cycle. And if you're not building quickly, and we weren't, you can get caught out, right? We ended up getting caught up with council. It was bizarre, because the council, when we did the resource consent, we sent it through to council, and it went through to what they call their design board, and their design board came back with an alternative, and they said, actually, we'd prefer to do it like this. And we looked at it and went, shit, that's awesome. They'd taken our development, which was a little bit ugly, and they came back with this plan that was just awesome. So we're like, okay, yep, we're totally keen to do that. So we went and did what they asked for, right? And then we took it into council, and they're like, yep, that's really cool. And then they put us through to consent hearings, and then they turned against us and fought against it. And so we had to take them to the Environment Court twice to get the development approved, even though we were doing the development that they wanted us to do. And so what we learned is that councils are a series of fiefdoms with a shared interest in car parking. And you can be talking to one part of the council and they'll have a totally different view to another part of the council. And it was diabolical. Anyway, we lost a lot of money and time trying to get that project back on track. And then we got caught with cost inflation and a softening housing market. So we got the project finished. The one thing that we didn't do is we could have cancelled all of the agreements on sunset dates. We didn't. We negotiated with the buyers a 5% price variation, which was just enough to cover our increase in costs at the time so that it would come out at zero. And we extended the sunset date so that we could get them through to settlement and get the project finished. Our builder fell over. They went bankrupt on the project. We had them on a fixed price contract. They couldn't deliver on it, and because of price inflation, so the builder fell over. So we had to step in and actually take over the project partway through. So we finished the project ourselves. We honoured the sale and purchase agreements, but in honouring the sale and purchase agreements, we ended up losing money. And ironically, the buyers ended up making a fortune.
They would have, because it was through that period when the growth was happening. So you just gave a 5% increase to cover a few costs, and they got the benefit. You handed them all the benefit, mate. See, one of the things that I've learned about you, JB, is that you operate with a great degree of integrity, and it's a real credit to you. And I think people need to take that on board to see that you can act with integrity and still achieving things going forward, even when acting with integrity. And that's what you've done all through this, mate. What's your greatest achievement in life today? What do you feel is your greatest achievement?
Surviving. I don't know. Look, you could say lots of things, right? I think my greatest achievement's still to come. Look, I'd like to give back at some point, way more than I do at the moment. The simple reality is when you're in the thick of it and you've got really big, ambitious goals, you just focus on getting through that. But there will be a time where I'll be able to give back a lot more. And I'm hoping that that's not too far away. Hoping that's in the next sort of 3 or 4 years where I can sort of take a more active role outside of Squirrel and look at ways that I can contribute back to the country. And to me, I think contribution and legacy are the big things, and I don't think I'm there yet.
That's really inspiring to hear you say that. I'm a great believer in contribution and legacy as well. So it's been really fantastic to catch up with you. We've had your property story, so I'm not going to ask your property story because we got into your development story. I don't think we could get a better property story than that. One question, did you have an agent in the middle of all that, or did you sell them off your plan yourself?
No, we had an agent in there. The thing I'd say is selling off plans very different to normal selling. That's certainly something I realised on the way through, right? It takes a very different skill set, selling someone something that doesn't exist yet. But yeah, we had an agent. Yeah, I learned a lot through property development, and it's not for novices. We've written a guide for property development. It's actually a really bloody good guide. So anyone that's interested in property development should download it. We went and interviewed a whole lot of successful developers and developers that have run into problems and had some pretty serious problems along the way. And I guess my input was in there as well. It's a really warts and all account of what to look out for with property development. But it's a risky pursuit. And I think the most important thing with property development, but it's probably also true of business and startups and anything really, is around risk mitigation. So, by all means take risk, but always have backup plans, always have exit pathways, think ahead, think through your risks, don't leave it to chance. The biggest problem I see with a lot of clients is just they're leaving it to chance. It just means you're not controlling the conversation anymore. It's just a very risky approach. The best property developers are the ones that are really good at managing their risk. Yeah.
Fascinating, mate. That is so true. There is so much that can go wrong with property development. I'll get a link off you, and when we post this, we'll put the link to your property guide on there. So if people need to work out what to avoid, mate, I'm sure that they'll be able to jump in there and read your manual. So we'll get that linked in there. And mate, it's been an absolute privilege and pleasure to have you here today, JB. I've really appreciated it. Thank you for taking the time to join us, eh?
You're welcome, man.
Excellent. Well, we'll catch up again. Have a great day.